G'day folks, Jim Langlands here from FX Charts with the currency outlook for the Finance News Network for Wednesday the 25th of July. Well, it was another pretty poor session today, really led by Spain and Greece, where things are looking pretty dire. In Spain it looks as though more provincial bailouts are going to be required, and the pressure remains on there. And in Greece, the EU Troika have arrived in Athens to assess whether Greece is going to be allowed to access the next tranche of the bailout package, and that looks increasingly unlikely. Greece's Prime Minister today said that he thinks the economy is actually going to shrink by as much as 7% next year. So things are not looking good there. Bond yields soared again. Spain was up at 7.6 at one stage, 7.61 I think it was, and Italy as well. That's not looking real good. That got up to over 6.5% today. So the euro, well, that's ratcheting slowly lower, and it got down to 120.41 in the overnight session. It appears to me as though it's in a slow march towards the 118.75 major support level that we've been looking for a while. There's bits and pieces of support along the way, 120 obviously being the first one, which I guess will be protected by some option-related buying. But beyond there, I think there'll be plenty of stop losses going off, and the trend looks slowly lower. The Aussie and the Kiwi, they both look soft as well today. They took their direction really from the equity markets, despite the RBA governor's pretty supportive speech for the Aussie really yesterday, and the better than expected HSBC flash Chinese PMI manufacturing data. That saw the Aussie get up to 103.15, but it's now back down to about 102.20, and looks as though a break of 102.15 could see a bit of a squeeze lower. But that's going to be pretty reliant on what happens with the CPI data that's due out later in the session today. The Kiwi as well, that looks pretty soft, and it's currently sitting around 78.40. It's been down to 70. Well, it's pretty much on its low. 78.37 was the low, and it wouldn't surprise me to see that get taken out at some stage later in the day. Elsewhere, sterling's pretty much unchanged today. It's benefited from inflows from the euro. Euro sterling continues to head lower. So sterling remained reasonably supported and is unchanged at 155.05. Euro yen, that continues to make new lows. That's 12-year lows, that is. It's been down to 94.10, and while it's all in the euro, dollar yen ratchets very slowly lower, and it's currently at 78.20. Not doing a great deal, but just generally remains pretty heavy. Elsewhere, the Swissy, that looks like we're going to have a pretty good look at parity. It's been up to 99.70 overnight. I suspect we might need a little bit of a pullback before we've got the legs to do that, but it seems to be now that we're close enough to parity not to want to take a look and see what stop losses lie the other side. That's really about it. The markets do look to remain soft. Later on in the day, apart from the Australian CPI, we've got the German IFO data. And later in the session, the US equity markets are going to be driven by Apple's release after today's close of its profit data, which missed analysts' targets, and probably going to make sure that the US equity markets are heavy, and could equally put some pressure on all the risk assets, including the Aussie and the Kiwi. So that's really about it. Not an awful lot else to say. If you do want a more comprehensive outlook, though, go to the website as usual, www.fxcharts.com.au. And that aside, please just remember that, as usual, any outlook here is a personal view only, and is not intended to be used as trading advice. So that's about it. Have a very good day, and we'll talk to you tomorrow. Cheers.